Okay, so let's talk about three pieces of news that on the surface seem totally unrelated. You've got a legacy tech giant buying a startup, a crypto company teaming up with Sony, and a regulator maybe, just maybe, rethinking a rule that's been around for 20 years. By themselves, they're just headlines, but when you put them together, well, they show us how the world of your money is being completely rebuilt from the ground up.
You know, the best way to get our heads around this is to imagine a fintech dinner party. It's a weird party, for sure. You've got three very different guests showing up, and what they're doing is all connected. You've got the old school player, the cool new kid, and of course, the regulator, who's kind of watching over the whole thing.
So here's what we're going to unpack. First, how old money is desperately trying to buy its way into being cool again. Then, we'll look at how crypto is getting this massive stamp of approval from the corporate world. And finally, we'll see how the financial watchdogs, well, they might just be about to change the rules of the game for everybody.
All right, let's start with our first guest at this party, the big, established giant FIS, and a super strategic move they just pulled off.
You know the drill, right? For years, opening a traditional bank account has been a pain. You're filling out tons of forms, you're waiting for days, a lot of people just give up halfway through. But then, the fintech challengers came along and made it all super fast and buttery smooth. And that right there, that's the battleground.
So, what did FIS do about it? They went out and bought a company called Amount. Now, FIS is one of the biggest players out there. They provide the tech plumbing for thousands of banks. And Amount? They're the experts who build that slick, modern, get-it-done-in-5 minutes account opening experience. The goal here is really simple. FIS wants to arm its old-school bank clients with the weapons they need to fight back against the fintechs.
Honestly, it's kind of like a legendary rock band hiring a hotshot TikTok producer to remix their greatest hits, right? It's not about writing brand new songs, it's about making the classics sound fresh for a whole new audience. FIS is giving these old-school banks that modern remix, hoping they can finally go viral with new customers.
At the end of the day, FIS is making a huge bet on the future. They know that if they don't adapt, their clients and they themselves could go the way of the dinosaurs. They're making a choice to be Spotify, not Blockbuster. It's as simple as that.
Okay, let's shift gears and talk about our second guest at the dinner party, Coinbase. And they're not just showing up, they're bringing some very, very famous friends with them.
So get this, Coinbase has teamed up with two absolute titans of consumer tech, Sony and Samsung, to pour money into a stablecoin startup called Bastion. Now, stablecoins are just cryptocurrencies that are pegged to something stable, like the US dollar. The big plan here is to build the foundation to use these stablecoins for everyday stuff. We're talking gaming, e-commerce, you name it.
And believe me, this isn't some tiny niche market we're talking about. There is over $150 billion worth of stablecoins circulating around the globe. This isn't just about speculation anymore. It's about building a massive new layer for digital payments. And when you see names like Sony and Samsung get involved, you know this is aimed squarely at you and me.
This analogy just nails it. For so long, crypto felt like this niche underground scene. Well, this partnership is like that scene breaking into the absolute mainstream. We're talking Super Bowl halftime show level. It's a huge flashing sign that says, this is legit now.
And that's really the whole play here. Coinbase is strategically building this web of trust. They want to completely change how we see stablecoins, moving them away from the wild west of crypto and making them feel as normal, as safe, and as boringly easy as just tapping your phone to pay for a coffee.
And that brings us to our third and final character, the cranky uncle at the party, the SEC, the regulator who might just be about to change their mind on who gets to join the fun.
So, at the center of this whole story is this rule from way back in 2001 called the Pattern Day Trader Rule. Basically, it says that if you trade too often in a short amount of time, you get slapped with a special label.
And as soon as you get that label, bam, you're required to keep a minimum of $25,000 in your account. For 2 decades, this has been a massive wall, keeping most regular small-time traders from being really active in the market.
But now, here's the kicker. The SEC is officially considering changing or maybe even just completely scrapping this rule. This is a huge deal. It could literally open the floodgates for millions of smaller investors to trade more actively, which would totally reshape the landscape for platforms like Robinhood and Schwab.
The best way to think about this is to picture the SEC as a nightclub bouncer. For 20 years, he's been guarding that velvet rope to protect people. But in a world of meme stocks and crypto, he's finally looking inside and realizing the party has completely changed.
The old rules just don't really make sense anymore. So he might be about to lower the rope and let more people in.
This whole thing signals a potential shift from gatekeeping to just guidance. Instead of keeping people out, the SEC might start focusing on education and putting safeguards in place once you're inside. They'd be trading their velvet ropes for velvet gloves. And trust me, retail traders are more than ready.
Okay, so we've met the three guests at our dinner party: the legacy giant, the cool disruptor, and the regulator. Now let's pull back and see how their stories all weave together into one big narrative about the future of your wallet.
So let's connect all the dots here. You've got a legacy player like FIS buying up new tech. That's a clear signal that the old guard is adapting to survive. You have a disruptor like Coinbase partnering with giants, signaling that crypto is finally growing up and going mainstream. And you have the referee, the SEC, thinking about easing old rules to give more access to everyone.
Look, each of these stories is a powerful signal on its own. But when you take them all together, they tell us something much, much bigger. The old, clear lines in the world of finance are just disappearing. Banks, fintech, crypto, retail traders, they're all crashing into each other, and the entire system is being fundamentally re-architected. And this leaves us with one critical question to chew on. When the old guards, the new challengers, and the referees are all changing their strategies at the exact same time, the game itself is totally transformed. So who do you bet on to win control of the future of your wallet?
And just a quick final note. All this content is for informational and entertainment purposes only, and it is definitely not investment advice.